Hey everyone, welcome back to the channel. Today, we're diving deep into the gold market, the shiny metal that never stops surprising traders and investors. Gold has been on an incredible run lately, breaking past major resistance levels and testing new highs near $4,300 per ounce. But the big question now is, will this rally continue, or are we about to see a sharp correction? Stick around, because in the next few minutes, we'll break down gold's technical charts, key support and resistance zones, RSI signals, and the overall market psychology behind this move. Gold prices recently surged beyond $4,300 for the first time in years, hitting a new all-time high. This bullish move was largely driven by falling U.S. Treasury yields, increasing recession fears, and continued central bank buying. On the daily chart, momentum has remained strong, with buyers pushing prices well above both the 20 and 50-day moving averages. However, we can also see early signs of exhaustion. RSI levels are hovering around 75 to 80, suggesting that gold might be entering overbought territory. Let's talk technicals. The $3,950 to $4,000 range is acting as a strong support zone. This is where buyers stepped in multiple times to push the price higher. Above that, $4,300 to $4,400 is the major resistance area. If gold manages to break and hold above $4,400 with solid volume, we could see the next leg heading toward $4,500 and $4,650. But if it fails and drops below $4,000, expect a short-term correction back to around $3,850. From a technical standpoint, gold has broken out of a consolidation phase that lasted nearly 6 months, forming a strong bullish flag pattern that usually indicates continuation, but only if volume confirms the move. Moving averages tell a clear story. The 10-, 20- and 50-day moving averages are sloping upward. That's a textbook bullish signal. However, when you look at the 100- and 200-day averages, they're lagging behind, showing that the long-term trend just turned positive a few weeks ago. The Relative Strength Index, or RSI, is currently in the 75-plus range, overbought territory. This doesn't mean gold will crash tomorrow, but it does hint that some sideways or downward consolidation might be coming soon. Traders are likely taking profits while waiting for a new entry around the $4,000 support zone. Every time gold makes a new high, we see the same pattern: fear plus greed. Retail traders start piling in late, while smart money starts scaling out slowly. This doesn't mean the bull run is over. It simply means the market needs to breathe. Corrections are healthy in a long-term uptrend. Remember, no asset goes up forever in a straight line. The current sentiment index shows a greedy phase, and historically that's when gold tends to pull back before the next rally. Beyond charts, fundamentals play a huge role. If the Federal Reserve hints at rate cuts or the US dollar weakens further, that's bullish for gold. Geopolitical tensions, inflation fears, and global liquidity also feed into gold's strength. Central banks, especially from China and India, continue to increase their gold reserves, and that keeps the long-term demand strong. But on the flip side, if inflation cools faster than expected and the dollar index strengthens again, we could see gold dip below $4,000. So keep an eye on those macro triggers, because that's where big money moves. Let's simplify the possible scenarios. Keycap 1. If gold stays above $4,000 and breaks $4,400, expect $4,500 to $4,650 as next targets. Keycap 2. If it fails and drops below $3,950, a correction toward $3,850 or even $3,700 is possible. In both cases, risk management is key. For short-term traders, trailing stop losses around $3,980 makes sense. Long-term investors, this is just another wave in a multi-year bull market. So, what do you think? Will gold smash through $4,500, or are we looking at a temporary top? Let me know your thoughts in the comments below. If you found this analysis helpful, make sure to hit that like button, subscribe to the channel, and turn on notifications so you don't miss our next market update. Thanks for watching, stay sharp, and trade smart. See you in the next video.